Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today to order.
Welcome back to Bitcoin Capital. Today we're looking at the future of Bitcoin in the United States following the return of Donald Trump to the White House. Joining us today are Perianne, CEO and founder of the Digital Chamber, and Preston Pysh, general partner at Ego Death Capital and founder of the Investors Podcast Network. Thank you guys for joining us today.
Hey, Jesse, good to be here.
Great to be here, Jesse.
Very good. All right, Perianne, maybe we can start with you. Maybe you can start by giving us a quick introduction to the history and the mandate of the Digital Chamber.
Yeah, no, happy to. Well, I'm Perianne, the founder and CEO of the Digital Chamber. We are a nonprofit that's headquartered in Washington, D.C., and our mandate is to bring Bitcoin and blockchain technology to the people of the world. We founded this organization in 2014, so we'll be celebrating our 11th anniversary later this summer. So we've been on the ground, working to support the growth of this industry since very early days. I saw, in the super early Bitcoin community, I felt passionate about the policy and the regulatory and the compliance issues, and felt that this would be a massive barrier to the adoption and use of Bitcoin and other cryptocurrencies. So we've spent a lot of our resources and our focus working directly with government stakeholders, educating them on the power of this technology, helping address common misconceptions, and really guiding that regulatory process to ensure that whatever is put forward does not impede the people's access to be able to use what's an open source technology. So that's manifested in a lot of different ways. It's a really exciting time now that we have our first ever pro Bitcoin and pro crypto president. And it's time to get to work. We have a lot to do to improve the regulatory environment here in the United States. That's what, a big part of what we're focused on at the Digital Chamber.
So what were those initial interactions like 11 years ago? I'm curious. My background is in capital markets. I used to work in investment banking, and I was, I had in 2016, I was pushing Bitcoin investments within the investment bank, Macquarie, an Australian bank. It was a heavy lift at that time. And I imagine 2014, talking to policymakers, it must have been just way out of their wheelhouse.
Yeah. And I mean, I was obviously a part of those conversations in 2016. And I remember hearing that if someone sent an email that worked at any of the major banks that had the word Bitcoin in it, it was an immediate termination.
Yeah.
So
and that was real too.
Yeah.
Yeah.
So I started my career working on Capitol Hill. So I'm a former congressional staffer. So it was kind of funny going to a lot of my old friends and contacts on the Hill saying, I'm working in the Bitcoin space now, would love to tell you about it, would love to work with your office. People will be like, well, what are you doing at those Bitcoin meetups? Like, people were like worried about my well-being. Fast forward to today, and we're in high demand for educational briefings so people can better understand this technology and what it's all about. But I helped recruit the very first pro Bitcoin member of Congress, and that was Mick Mulvaney, Congressman Mick Mulvaney, this congressman from South Carolina, who later went on and he served as President Trump's chief of staff in his first administration. But in 2016, he started the Congressional Blockchain Caucus. So we went from recruiting our very first one member to today, we have over 290 pro crypto members of Congress that were sworn in to serve this year. So it's hard to put into words just how big of a deal that is, to have to just get one person that will listen to you, one person that will care, to having a true majority in Congress. It's a massive, massive, massive accomplishment. So make no mistake, we are the majority party now. And a lot of the challenges we faced are, I think that the regulatory landscape is changing very quickly. But that war on Bitcoin and the war on crypto is officially over.
Yeah, I think that's one of the main takeaways from what we've seen from the administration so far. So Preston, I guess we don't really have a lot of clarity on what the exact strategy is going to be, but and from a Bitcoiner's perspective, I think it's been a bit of a mixed bag. We had an end to choke point 2.0, which I think is one of the major accomplishments. We had a repeal of SAB 121. We had a ban on CBDCs, but then we also had the president and his wife issuing meme coins. So are we heading in the right direction? What do you make of all this?
Before I answer the question, I just want to say I went on the Hill one time with Perianne, and the work that she does up on Capitol Hill is, God bless her. God bless her. It is a hard job. It is a really hard job, and you have to have a ton of patience. And nobody does it better than Perianne does. So I just want to give huge kudos to her and everything that they're doing at the digital chamber, because it is fantastic work. To answer your question, this is how I would approach it. Free and open markets are back, right? You might not like what some people are doing. I'm of the opinion that if there's something of true value, let the market discover it. Let the market pick that out. And am I for meme coins? Of course I'm not. I think they're degenerate scams and are horrible that aren't good for people that are participating in them. Do I think that the government should step in and try to regulate every nook and cranny of this? I'm not too concerned about it. In fact, if somebody's dumb enough to go buy something that's clearly just a rug pull, them having less buying power in the market to make decisions and influence of like where things go in the future, in my humble opinion, isn't necessarily a bad thing. I want the smart people to have the buying power, the Bitcoin, right? That actually is backed by real energy and things like that. So what I'm excited about is we actually have free and open markets. We have exchanges that can operate in whatever way they want. And if there's a bunch of degenerate gamblers that want to go on, I guess let them go, right? Do we need to shut down Las Vegas? I love free and open markets. I want people to be able to make whatever decision they want. So there's no like specific policy that I think is, we're only 30 days into this thing, Jesse.
Yeah, no, totally. Yeah.
Right. So like there's a lot of things that still need to get shaken out. But what I would, really press is free and open markets are back, and I'm here for it.
Yeah, I like that. I know there's probably a lot of Bitcoin maximalists that watch this show, and I know Preston, there's a lot of Bitcoin maxis that follow you. I like to say I'm a freedom maxi, which is ultimately like one of the core tenets of Bitcoin is freedom. So I don't think the Bitcoin community should dictate what people can invest in or what people can buy. That's really a market decision. That's certainly not a decision we should be dictating on people. Does that mean every technology that's out there is going to be the best? It's going to win? No. Let the free markets decide what's going to win and be ultimately still available to people in the long term.
Sure. Where do you think investor protections fit into that? Do you think there should be some kind of investor protection concept, or, buyer beware?
Well, that's a big part of what's happening. That is the conversation in DC right now. You may have heard of the market structure legislation, Fit 21, which did pass the House in the previous Congress. There's a big effort to create a regulatory framework for digital assets. Which includes, registering either with the SEC or potentially the CFTC, and regulators having, a high degree of oversight of what's going on in the market. So those are the big questions: is what exactly should that look like? And defining, is it the SEC? Is it the CFTC? Which tokens are in SEC? Which tokens are in CFTC jurisdiction? Is a big part of the conversation. But I think another part of the conversation that's often left out is we have laws for fraud. We have plenty of laws on the books where regulators can come in and apprehend fraud. And I think that's where we've really messed up in the United States. And that's a big reason why I think so many businesses have left the US altogether, is you have regulators like the SEC going after companies who aren't engaging in fraud. There's no allegations of fraud, but yet you have these enforcement actions, and then we don't even bother to go after the most fraud, or we completely missed all the major fraud cases, like what happened over at FTX. So I think we really should be focusing our enforcement efforts on targeting clear cases of fraud, get the bad actors out, and let the markets work over time to address some of these other more nuanced issues.
Yeah, I think for me, that was the big lessons of ICOs. Like I thought that ICOs conceptually were very interesting, this new way to raise capital from people all over the world. But, kind of in hindsight, what was missing was clearly defined issuer obligations and investor rights. Like you need to kind of set out what you're getting. And if you know the rules and you're going to invest, then I think buyer beware kind of makes sense there. And then you also need some sort of regulator. In hindsight, it turns out you need some sort of regulator to step in the middle of that and to do enforcement and to make sure that people are playing by the rules. So I think that probably makes sense. But I think, the question is like, who is the regulator then? So I guess that's kind of the big deal in Capitol Hill, or what they're trying to figure out now is who should regulate this. Are there any conversations about a new regulator, like the path that they took in El Salvador, for example, where even in El Salvador, where capital markets and financial services are a small part of GDP, the banking lobby kind of bogged down the efforts to create the digital asset framework, and they ended up creating a whole new framework with a new regulator.
That's not the current discussion in the United States. So it's defining when digital assets are in the SEC versus the CFTC's jurisdiction. On the CFTC side, there's a lot of discussion about expanding the authority of the CFTC to have spot market oversight of digital assets, which is a huge difference to how they're currently structured as a regulator today. They don't oversee the spot markets. They have fraud and manipulation authority. So if there's fraud or manipulation happening in the spot markets, they can step in. But that's the extent of it. They're not surveilling those markets like they are in the futures markets. So that's a very, very, very big step to take. That's a huge change to make at the CFTC. And that's one reason why it's been such a big conversation and debate and discussion. Something else that's been talked about, but hasn't really been put forward is the concept of a self-regulatory organization. The established markets all use SROs, which would, report into the CFTC. So that there's definitely an opportunity for an SRO to have jurisdiction and oversight of the digital asset markets, but we're not entertaining the idea of creating a whole new agency like what they've done. And you mentioned El Salvador, also in the UAE, they do have their own dedicated digital asset regulator. There's other jurisdictions that have done that as well. I'm personally not in favor of that because I'm a limited government person, kind of going back to like as a freedom maximalist, the idea of expanding the size of our already overly bloated federal government is a very hard pill for me to swallow. So there's certainly an argument of, well, do we need to have like true experts who really understand this technology? But I think we can achieve our concerns of investor protections, consumer protections with the litany of regulators we already have.
And is there any concern? Because I kind of see like if this goes down the wrong path, right? We have a Cambrian explosion of meme coins and ICO type products, and we see global retail just completely get their face ripped off for 4 years. Do you worry that if we get this wrong, that there's going to be mean reversion and a backlash, and then the next, the next administration come in and just bring back everything from the previous administration and maybe even then some?
Yeah, I mean, there certainly is a concern, and we really want to make sure that the policy environment is political proof. What we mean by that is we wouldn't want to put in a set of rules and regulations that a future administration, no matter who it is, can come in and undo it. Ultimately, what we need to make the US the crypto capital of the planet, which is President Trump's goal, is we need legal clarity and regulatory clarity so businesses can operate here and understand what the rules of the road are. And today we don't have that. We've had the opposite of that, which is the regulation by enforcement, which is why there's a big push to not only work within the regulatory agencies to get regulations on the books that create that regulatory framework, but also legislation. If we can get legislation passed, it would really codify it and future proof the regulatory environment.
And so, go ahead.
Jesse, I just want to add to this. I think one of the
Yeah.
things that's going to be really profound in the coming 4 years is this SAB
Mhm.
121 that's allowing banks to custody, which is going to allow banks to potentially issue their own stable coins. And when we think about the entrenchment of this space, I think that that's going to be a huge part that's going to be hard for an administration to come in 4 years later. Let's say that what you're proposing happens. They come in 4 years later and are like, hey, we want to pump the brakes on all this. We want crypto armies that fight this, and the whole narrative that we just left. I think the removal of this SAB 121 is going to be really, really difficult to do that because of the entrenchment that I kind of expect. Now, whether it happens or not, I don't know. But when you look at the profit margins of Tether and what they're able to do by tokenizing sovereign debt, okay, I think some of these banks are looking at those profit margins and they're saying, hey, we want to play in this space somehow, some way.
Oh, I'm sure.
And as the head of operations at Bitfinex, I'm sure you're well versed on this.
Yeah.
But I think that is healthy for the ecosystem, that we get other participants that are trying to dig into this. And at the end of the day, making the dollar, having a real buyer, a real free and open market for sovereign debt, especially sovereign debt that maybe has a little bit more duration than 1 year money. That I think is going to be very important. I think that's going to be embraced. And I think anybody trying to turn that off 4 years from now is going to have an extremely difficult time doing it.
I wonder, I was thinking about that as well today. And so I was listening to your podcast with Paulo, and I was wondering, as I remember Arthur Hayes during COVID, and we were talking about doing stimuluses, and they had to do it through the banks. And Arthur Hayes had this idea of, well, why do we need the banks? Why can't the Fed just have a wallet? Like, I wonder, could you have treasuries? This is what people want, right? In emerging markets and around the world, and access to the US dollar. Maybe you could just could you just issue treasuries straight to people directly? Could that be an endpoint?
That sounds very CBDC to me. And I think that this administration, they don't like that. I mean, there's been executive orders that have already been published on that idea. And I mean, look at the government tech infrastructure. I mean, you literally have Elon Musk running around wearing a shirt that says tech support, and he's talking about how just old and lethargic. Can you imagine the government trying to make some type of,
Well, yeah,
thing
I'm
with
Canadian.
these
Look how
humans?
long Canada and the EU have been talking about this and working on this, and it's just
Yeah.
like, you feel comfort in it that they'll never be able to actually execute on it.
I think it's
So, yeah,
actually systemic risk. Like, I think
yeah,
if I was going to have a conversation with somebody in government, obviously I don't want it because of just the government being involved in that. But I think
sure.
if I was going to make an argument that maybe they would listen to, it would be, if you start centralizing that and you're controlling it and you run into some type of technical failure, can you imagine the systemic risk that would pour through markets because the government was involved in something that got hacked or compromised? Like, I think you push that out into the private sector as much as possible and let the private sector solve these problems. And if they are mismanaging the tech behind some of this, well, then the failure is 10% of the market and not the entire market, right? So I think that's an important consideration as they look at it, continuing to tokenize, because there's a real market demand, tokenizing U.S. sovereign debt.
Yeah, I think that's really interesting, because I was wondering about this too. After the success of the Bitcoin ETF, there has to be a lot of people sitting at desks around Wall Street wondering, like, how do we follow up on that? Like, what do we do next? Because they did an Ethereum ETF, it wasn't quite as big. I think they're contemplating some other crypto ones that don't look as big, but that was like the one massive product. And there has to be people that are wondering, like, how do they follow up on that? And I think the stablecoin idea probably is a pretty intuitive one. Makes sense.
On the ETH ETF, so one of the differences between the US ETH ETFs and ETH ETFs that are trading in other jurisdictions is there's no opportunity for staking in the United States. The SEC forced the issuers to remove that functionality, which is kind of akin to saying, like, you can't pay a dividend for a stock or an equity. So that is something we're working to address at the Digital Chamber, to allow for staking and any type of proof of stake ETF. That would make that a much more competitive product globally. And I think that had a big reason as to why there really wasn't a lot of there wasn't anywhere near the same amount of volume in the ETFs as I think many were expecting to see. I did want to follow up on what Preston was saying on SOB 121. This is something we were deeply involved with at the Digital Chamber. So it's the staff accounting bulletin. That's where SOB 121 comes from. This was a set of rules that the SEC issued that applied to banks that made it basically impossible for a bank to provide custody services for Bitcoin or any other type of crypto asset. It said if for a bank, if they're going to hold a Bitcoin or a digital asset, they have to also hold other reserves 100% to your crypto holding. So if you have $100 in Bitcoin, you'd also have to have $100 in cash or some type of like cash equivalent to ensure the solvency, which is makes it from a business perspective impossible. You don't have those types of requirements for any other custody services for those providers. And ultimately what happened is we had a huge, we now have massive consolidation issues in the Bitcoin ETFs because our institutional custody providers, whether that's State Street or BNY Mellon or other very large and well-capitalized financial institutions, they couldn't go to market. So now everybody is using Coinbase, which is great for Coinbase's business, but it's created consolidation issues, and except for Fidelity. So Fidelity was the only company that was able to create their own custody business. So that really shows a lot about the technical acumen at Fidelity's team, and that very much has to do with how early they were to market. Their digital asset business is over 10 years old. So when this rule came out, we immediately raised our hand and said, this is going to be detrimental to the industry. If we want to bring Bitcoin to the people of the world, institutions have to play a role in that, because institutions today have critical mass, and they're going to be a critical, one on-ramp to help bring more people into our community. And if we box them out, that's going to have a huge impact on adoption. So we worked to get that rule removed. We actually had legislation that was passed in both the House and Senate last year. It is the only digital asset legislation that's ever passed standalone in both chambers. And we pushed that at the Digital Chamber. And unfortunately, President Biden vetoed it at the last minute. So then we worked, now that we have new leadership, and that was our request, was to day one repeal that. And they did. So we're really glad to see that strike down, and we think this will ultimately be good for the Bitcoin markets.
Just to kind of add to what Perianne's saying, the other part to this that I find really exciting is the in-kind redemption request that happened immediately when the administration changed over. You had BlackRock say, "Hey, we want to be able to take possession of these Bitcoin on behalf of the ETF." And I think that is also another healthy development, because my concern with the past administration was like all these coins were basically being held by Coinbase, and you talk about like a honeypot of just conflict of interest for the government and this institution that's custodying all these Bitcoin for these ETFs. Now that you have the SAB 121 and you have in-kind redemptions, I think that's a step definitely in the right direction to just try to distribute and remove all this systemic risk piling up into one institution.
Yeah, especially when you have so many different roles within capital markets rolled into one player. So you have the same entity is the exchange, is kind of as a broker, is the OTC desk, and then they're also the custodian. So as much as possible to split that out is probably a good thing. So when Trump is talking about the US becoming the crypto capital of the world, what does that mean?
Well, you'd have to ask him, but since he's not here, I mean, what I think it means is we want the US to lead in the development of blockchain innovation. And I think this is a national security issue.
Okay.
I do think that Bitcoin is a strategic asset. We should have strategic Bitcoin reserves like we do with other commodities. And I also see critical potential for blockchains to I think any asset could be tokenized and traded on a blockchain. And I think that's the future. That is what Web3 is. And that's what's being developed. Blockchain rails are what we will use to transact and interact in the digital economy. I think it's pretty clear that's where innovation is going. And I think it's critical that the US is at the forefront of that. Make no mistake, the United States invented, developed, and commercialized the Internet 1.0. That led to today, most of the biggest businesses in the world were internet businesses, and they're American businesses, whether that's Google or Meta, Facebook, Yahoo.
Yep.
Nvidia, these are US businesses. Imagine if the US had taken the approach towards the internet that it did towards crypto. Imagine if the Googles and the Facebooks of the world were based in Russia or China, what that would mean for our economy today. So just as important as it was for the US to lead in the development of the internet, we should be leading in the development of blockchain. And I think President Trump does understand that, and is working to make sure that the leading companies building blockchain infrastructure are based here in the United States.
Jesse,
Yeah,
in tech, in the tech community, there's a saying that if you're not willing to cannibalize yourself, somebody else will. And when we look at this technology and what the U.S. has to lose, which is its dollar dominance, and a lot of people say don't compare it to a currency and all that. I mean, at the end of the day, if the U.S. does not embrace this technology, they risk being left behind on the world stage, because other countries are going to adopt it. Other countries are going to lean into this very heavily. And if there's one thing we've learned about Bitcoin, is you can't create more than 21 million of these units. And so as the M2 growth rate is in excess of 10%, or probably around 12% globally, this is a new technology that no one entity, no one government can come in. Everybody knows this, right? And so you can either lean into this new technology and slowly cannibalize yourself and embrace it on a global game theory, situation, or you can, lean into the old system and think that you're, invincible, and the rest of the world moves on. And what I see with the administration, with that comment, we're going to be the Bitcoin capital of the world, or whatever, grandiose saying it is. I think what they're really saying is that, like, if we don't cannibalize ourselves and kind of move into the new world and the new technology, somebody else is going to take advantage of that, and we're gonna lose our competitive standing on the global stage.
Yeah, and that's kind of the pitch that I've been making to smaller markets too, places like El Salvador, is that there's an opportunity here to leverage this technology and close the gap in capital markets with the big players. Like, you're never going to catch up to San Salvador is never going to catch up to New York, Tokyo, London. But if you embrace the technology, you can come at this asymmetrically and kind of close the gap. But I do think that there's two parts to this. I think there's an accretive part, like there's a part that moves the needle of the actual economy and that can be, improve the infrastructure between capital markets. And then there's the super financialized casino part that's more noise than signal. So, how do you split those out? Like, what do you think are the accretive parts of our industry?
I mean, when I'm looking at everything that's happened with the meme coin thing since the election, right? You literally have, I think Barstool literally has a token called Jail Stool, and this thing's trading. And so, like, when you let a free and open market happen, and you're not, because the person who comes out and says, we need policy, we need policy, we need policy. What I hear is, I'm scared that this other thing is going to get people's. No, let the free and open market demonstrate to people, right, that these are scams. And it's doing it in style. Like, look at the Trump coin or whatever. It's down 80% from its high, or what? If you bought it, like, congratulations, like, you are gambling, right? And I think that what people have quickly realized in just 30 days, that Gary Gensler was holding back the flood else, and there was more confusion. I think there was more confusion as he's holding back the floodgates than there is today, which is everybody knows these things are a scam, right? And it's forcing people to do the research. And now, does that mean we don't conduct education? Of course we conduct education. And, like, you look at Bitcoin versus everything else. Bitcoin is the only thing that I would say is a real digital commodity. And so like if I'm talking to a person on the Hill, which, I'm glad I'm not doing, and Perianne is the one doing these things, because I wasn't real effective when I went on the Hill the one day I went up there with her. I would just say that Bitcoin's the only thing that who's the issuer? If you want more than 21 million Bitcoin, well, whose door do you got? There's nobody. You have to go mine it. You have to go expend energy. Now look at ETH, right? How many Ether were there 2 years ago versus today? And how many will there be in 5 years from now? Well, the answer is nobody knows. Okay. Yeah, except for maybe Vitalik, right? Which tells you everything about how something should be defined, whether it's a digital security, whether it's a digital commodity. And so that's where I think the energy needs to be spent, is in the proper categorization of definition. Then let's like have a real conversation about how these things should be defined, and make sure that we're paying attention to people that have very deep pockets that are trying to influence that process, and make sure that we are really going to bat on the education front as to how they're properly defined. And then when we do this, we let the free market run. And like Perianne said earlier, there's so many laws already in place that they can pluck and pull from to conduct enforcement. It'll make your head spin.
Yeah.
And my views on this are a little bit different than Preston's. I don't think all meme coins are scams. I don't think just having a token, issuing a token, makes it a scam. What makes it a scam is when you're pumping and dumping, or if you're doing something different than what's stated in your disclosures. You're intentionally misleading investors for your own personal gain. So just issuing a token, that's not fraudulent behavior. It's what you're doing and what you're telling people. And that's where the fraud laws are really important. And I think we have a lot of room to improve in the United States, of being more on the cutting edge, of being able to catch that, which is hard because the market moves so quickly. But that would be a good use of enforcement resources, is monitoring that and making sure that people who are issuing tokens are not misleading investors. And that's really what the SEC is supposed to be, or was supposed to be doing, but they spent all their resources doing other things. I also think NFTs, or now I guess it's more like meme coins, they're very akin to like a baseball card. We don't go around and say like, well, baseball cards are a scam. People have every right to buy a digital collectible, just like they do have a right to buy a physical collectible. It's when you have issuers who are telling people you're going to make a ton of money, or there's other things happening behind the scenes that aren't disclosed. That's what the problem is. And there does need to be an effort to clean that up. I do think, to Preston's point, Bitcoin is different. And that's how I've always looked at it. Bitcoin is a store of value. That's what makes it different, because it has that limited supply. Even Jerome Powell, the chairman of the Federal Reserve, has said it's digital gold. Gary Gensler called Bitcoin digital gold. That's a very, very different use case in the market than a proof of stake token. Having something like Ethereum, that's your first Turing complete blockchain. What was the purpose of that? To create a platform for smart contracts and decentralized applications. It's more like a decentralized supercomputer. That's a very, very different use case in the market than a store of value. So that also needs to be recognized as we're developing the regulatory environment, that not all cryptocurrencies are the same. And that's where having a taxonomy comes into play.
But what is the benefit for the economy of having a million meme coins? Like, I don't see any benefit to that to anybody.
What's the
I don't see
benefit of
like
having Beanie Babies, Pokemon cards, Magic the Gathering cards? You tell me. It doesn't
Well, I
mean
think,
they should be
yeah,
banned.
no, I think the difference is that, no, I'm not saying that they should be banned. I'm just expressing my strong dislike. Is that
Well,
for
Jesse,
two reasons?
Jesse, I
that,
think this is important though.
Yeah.
That what the administration came out and basically tagged this as is these are like trading cards, right?
Yeah.
Now, whether you agree with that or not, that's up to the eye of the beholder. But that's how the administration is treating it. Is this is no different than Topps making a bunch of baseball cards, and if they want to rug pull somebody that there was only 100 cards of player X, Y, and Z, and now they want to put 1,000 of those cards onto the market. They're basically rug pulling the valuation of that rug card, but they're doing it in physical form. This is just a digital version of that. That's the argument that's being made, and I think that's the ground. And Perianne, correct me if I'm wrong, but that's the groundwork that they're trying to do from a policy standpoint moving forward. Do I think
it's not often I find myself in a podcast where I'm not libertarian enough. So, it's an interesting position I'm kind of struggling with. But I think
freedom, Maxi.
I think maybe the difference is that the scaling function of the internet, right? Is that if you just have these physical trading cards, I mean, it's really hard for them to scale millions of people to millions of people. But with the internet, the numbers can just get so big. And then also kind of the trend of what you see is that it's kind of sophisticated predatory people taking advantage of, desperate, not very clever people. And I feel like I'm about to say that we need the government to protect us. I can't believe I'm saying that, but do we need the government to protect us in some way?
I mean, again, that's where your fraud laws come into play. I mean, if you have an issuer or if you have someone who's engaging in abusive, manipulative, fraudulent behavior, the government absolutely should go after those people with the full force of the law. Absolutely. I've always had very strong views against fraud. It's like, look, this is
I would think so.
This is such an important area. I've dedicated over 10 years of my career to working in this space. To have people like that come in and just abuse the technology and create a bad name for all of us, it's been hard over the years seeing that happen over and over and over again. So I'm very strong of like, if you have someone that's abusing the technology for nefarious purposes just so they can make money or whatever, we should be going after them aggressively. And that, again, there hasn't really been a dedicated effort to do that. And I think a lot of that has to do with just lack of leadership within the government and a lack of technical expertise to be able to do that. So I don't know if we've come up with like a new idea on the show just now, but that if there's anybody out there listening that wants to help create something like this, that could help the government identify frauds and scams in this space so they can go after those bad actors, that would be a very good use of resources to help clean up, bad behavior in our community. Something
that's rarely talked about, Jesse, is just because you're not seeing some of the people that are conducting these actions with these meme coins and such, doesn't mean that they're not getting sued into oblivion. Right.
I believe it. Yeah.
I have a good friend, Joe Carlasari, and it's funny. I'll talk to Joe sometime, and some meme coin or just some total scam happens, and I'll text Joe and I'll be like, "Are these people going to get sued? Like this just seems like and his response back is, "Absolutely. There's probably 50 people suing them right now," but nobody ever talks about that online. And I think that when it's not talked about, people just assume they're getting away with it. And in some cases they are, and then in many other cases they're not. So that's
I think there's a lag. There's a lag of about one cycle before the regulators and the lawyers tend to catch up with people, and then the hammer drops. But this is one of the things I think that's interesting about El Salvador is because they're such a small country in terms of geography and population. But I think that they've really nailed on the accretive parts of the industry, like more than any other regulator anywhere or any other administration or policymaker. So their focus is Bitcoin, stable coins, and then tokenized securities / real world assets. And for me, that's what moves the needle. And I think that the meme coin stuff is really a sideshow that I find like super distracting and ultimately unimportant to the economy and to like most investors and people with money, to be honest. I don't know. Do you agree?
Look, it's, I forget what the exact stat is, but it's like 9 out of 10 startups fail, right? So there's going to be a lot of ideas that get proposed in the market that just aren't going to work. So you need to be extremely diligent when you're making any kind of investment in any type of new technology. I think kind of the other piece of meme coins is NFTs, the metaverse gaming. There is some interesting things there that I think are worthwhile, where you can create a whole new type of digital experience for a customer or a consumer. And some of the largest brands in the world are looking to use blockchain technology to create new digital experiences. So there is something there. I think it's going to take some time for all that to be developed and commercialized and actually used. But I think there certainly is. I mean, going back on the real world asset things, I think any asset can be tokenized and represented on a blockchain to create better efficiencies, cut costs, make it more effective to engage in commerce and regular transactions. I think we'll see that in the gaming and the entertainment industry too.
Yeah, I think we'll see that everywhere. I mean, I think that's the direction the capital markets have to evolve. I mean, we've got a system where we have platforms like Bitfinex where you can do real-time settlement, right? It's not T+2 or something like that. And you can trade every day, Christmas, Chinese New Year's, whatever it is. So you've got an objectively better system. I think it's just a matter of time before, traditional capital markets catch up to that. And I think that you've seen a lot more comments from Larry Fink and these kind of people pushing in that direction. So I think it definitely moves that way over time.
While we're on the fraud piece, I'd love just to take a second to talk about kind of a bigger fraud and abuse conversation that's happening in our country.
Sure.
And that's with the DOGE, the Department of Government Efficiency. And it's just been, I've been following what they're doing, pretty closely. And every day they're just revealing, look, we found more instances of fraud happening within our federal government, millions, billions of dollars of contracts. So I've always had, strong emotions toward fraudulent actors. But this happens in other places too. It even happens within the government itself. And at a much larger scale, I think that's happening inside the federal government than it is in the cryptocurrency space. And as we're saying, hey, we should apprehend bad actors. I do wonder, will the DOGE, will the Department of Justice go after these truly egregious, fraudulent things that have been uncovered? And will there be any, prosecutions for that? And I mean, I think stealing taxpayer money is much more egregious than, the type of fraud you see in the crypto space. All fraud is fraud, but it's a whole different story when you are sworn in as a public servant and you're stealing taxpayer funds. That's just a whole nother level of wrong.
Yeah, agree. So what about the digital asset stockpile? What do you think that looks like? And do you think we're actually going to see that at the federal level, or do you think it'll come from the state level? It's kind of difficult to figure out what's going on at the state level. There seems to be a lot of noise, but I'm not sure how much of it is signal.
Yeah, I do. So it's important to recognize that it's much easier to get things done at the state level than the federal level. And a lot of times state governments are used as like a testing ground to then bring things that work to the federal level. So I think it is possible we will see something happen at the state level before the federal level. And that's kind of typically how things happen here in the United States anyways. But getting legislation introduced is not a difficult feat to do. One of the secrets of in the lobbying world, it's not that difficult to get a bill introduced. It's much more difficult to get it passed. But it's much easier to do it at the state level than the federal level. So there's been legislation introduced in a number of different states, but it's got to get all the way through and passed into law. And it's very possible we'll see a state do that. At the federal level, there's kind of two ways that they're looking at it. You have through executive action and then through legislation. So Senator Lummis is leading on the legislative effort. And then at the executive level, they've created the Crypto Czar office, and there's a council of the heads of the federal agencies. And right now, they have a deadline to create a report on how to do it. So I meet with very high-ranking senior government officials here in the United States on a regular basis, including people in the White House, in the administration, like in the agencies, and U.S. senators and Congress people. And I pretty much ask everybody, what's your confidence rating on this? And the people who are actually in a position of power to do it have very high confidence ratings. So it's possible to do. It's not that complicated to do. It's, do we have the political will to do it? And President Trump, he's made a promise to our community, and I think we need to hold him to it. It's very possible. It's really going to come down to leadership. Is leadership going to get it done?
What do you think, like, the timeline on that confidence is? Is that something that can happen in a year, or is it kind of a longer term thing?
So on the congressional side, and really it's if you can get Congress to pass, a spending bill to appropriate the funds for it, that's going to kind of give it the best legs possible for the long term. Congress won't turn to this until later in the year. The priorities right now with the legislative agenda are going to be stable coins and market structure, and then they'll turn to this after. That's according to my conversations with congressional leadership. They can change their mind, but that's my understanding of where that's kind of coming up in the prioritization level. And even before we get to crypto bills, there's other legislation that's taking precedence. Like we had a budget bill that was, is working its way through this week. So there's the budget bill, there's a farm bill that's taking precedence over any type of digital asset bill. But I think President Trump wants to get market structure done in the first half of this year. It's possible to do. We'll see what happens. It's a very political process. But I don't think the strategic Bitcoin reserve legislation will really be considered until the second half of this year is when I think we'll start to see a lot more movement. The bill does need to be introduced on the House side. So you need a Senate bill and a House bill. I do expect we will see a House companion bill soon, like within the next several weeks to month. So that's critical because you need legislation on bicamerally. So that's the other piece is Senator Lummis introduced it in the Senate last Congress, but there wasn't a House companion bill. So just getting House sponsors is showing real progress.
So there's kind of a timeline on that. Well, so I presume that because it didn't get proposed in the House was because the Democrats controlled the House and now the Republicans control the Congress and
any
the
member
Senate.
of Congress can introduce a bill.
Okay.
And by the way, only 2% of legislation that gets introduced actually becomes law. It's really hard to get something passed, which is why we were really proud of getting that SOB 121 bill, that repeal bill passed, because it's just difficult to get things. The founding fathers created the Congress to be very difficult to get things done for a reason. So anybody could introduce the bill, but nobody did in the last congressional session. But we're confident there'll be sponsors that come forward shortly on the House side.
And you mentioned a Bitcoin strategic reserve. So what are the chances what's the composition of this stockpile? It's not going to be an equally weighted basket of Melania and Trump meme coin tokens, is it?
I haven't heard of that.
Okay.
So Melania's down, by the way, so I don't know if there's more volatility in Melania coin than Bitcoin for sure.
So do you think there'll be other things that sneak in there, or will it be Bitcoin only?
I mean, that's a big part of the discussion. I mean, there's been a lot of discussion kind of off the record about that, but in terms of the actual proposals that are pending, they're Bitcoin only. So, I mean, if I was the CEO of XYZ crypto issuer, why wouldn't you say, hey, put my token in there too? I think it's very
XYZ sounds like XRP
behavior, but again, I've thought about it a lot because it's created, a fair amount of controversy of hey, don't, it's supposed to be a Bitcoin reserve. Why are we talking about everybody else now? I do think, again, Bitcoin is different. Bitcoin is that store of value. It has the use case of a store of value as a digital gold. That's its function in the economic markets. So I think it's different. I do think the government could have some type of fund that holds other types of cryptocurrencies for other purposes. It wouldn't necessarily be for a strategic reserve, like how we stockpile other commodities. But there could be a reason why the government would need to have other tokens. One example would be if the government uses a blockchain to create efficiencies throughout the government process, which I think they should. I mean, again, going back to the Doge conversation, all this fraud and abuse of federal funding, if everything was tracked and traced on a blockchain that is unalterable, and you can 100% verify the money is going to where Congress appropriated to go, I think that would help make sure this never happens again. So, would we use the Bitcoin blockchain for that? Probably not. Would we use it, more, like a proof of stake system, potentially? So the government could use cryptocurrencies, blockchain networks for various applications. And that would be a legitimate reason for the government to need to have its own set of tokens that run those networks. So I've kind of thought, maybe we have, how can we kind of have our cake and eat it too, where Bitcoin kind of is that store of value, and you have a fund set up for that specific purpose. But you could potentially have a separate fund that's for other government interest, where the government could have its own digital assets, but it's different. It's not the same. It's not the same thing as a strategic stockpile.
Yeah. Preston, you were going to say something?
Oh, I forget what I was going to say. On that comment though that she was just saying, you could definitely do this on Bitcoin. You just have to hash the whatever. It doesn't matter how much data is. If you hash it and you put out like what the data was in a public kind of way, everybody could verify the results with the hash. So I think probably the best way to do it would actually be on Bitcoin, because it is so immutable, and there's not some NGO that squats on 60% of the coins and can make updates to the code base and things like that. So just from a technical standpoint, I would just throw that out there.
Sure, or a layer 2 like Liquid or something, you can do that as well, I think. So yeah, there'd be those options. So speaking of Liquid, on the Bitfinex securities, all the tokenization that we've done for tokenized securities and everything in our pipeline has been done on the Liquid network. Preston, what are your thoughts on tokenized assets and kind of the potential for that, and the opportunity in the US? Because my kind of view has been that this is more of an opportunity for smaller, more nimble countries, places like El Salvador, where you can get things done a little bit quicker.
Yeah.
Than in the US, where you've got like massive incumbents that have dug they've spent decades of time and treasure digging these deep moats to prevent changes to the way that things are done now. So what do you think? Is there an opportunity for tokenized assets in the US?
Yeah, I think there is. Now, whether the pace at which this actually takes root is kind of the real question. The advantages that you get with this is you just get more liquidity into equity. So let's just take Apple. If you were going to tokenize Apple stock, you now make it more saleable and available for anybody in the world to take possession of that equity. There's a company in Europe that's already doing this. I forget the name. Oh man. Sorry, I can't remember the name right now, but there's a company in Europe that's already, yeah, I'm sure I'm making somebody very upset. But this is something that I think is going to continue to happen, and it's just value add to more market participants to have access to something that's more liquid and more readily available to take possession of. So I think that it will happen. It's just a matter of how much the legacy financial system kind of battles it. When you think about exchanges like, call it Robinhood, the rehypothecation of stock certificates is a lucrative business, and so it's a huge business. And so when you start tokenizing this, and somebody can actually take possession of it, and that asset can't be rehypothecated, you're biting into somebody's massive revenue stream as the way that the legacy system exists today. So there's going to be a lot of lobbying. There's going to be a lot of people trying to fight that. But if you think about it from the end user's perspective, I think this is a very advantageous upgrade for an individual to take possession of their stock certificates so that they're not being rehypothecated. So I'm for it. I like it. The best way to do it, I'm sure there's a lot of people that could give you technical answers that, there'd be arguments for some versus the others. But yeah, clearinghouses is another area that would probably be battling this, because you're biting into the way that they make money and the way that they operate, and
custodians, everybody. Yeah, there's just a lot of players in traditional capital markets that, from a technological perspective, they don't really need to be there anymore.
Yeah. And you know what? At the end of the day, nature loves efficiency. Nature wants things to operate with the least amount of energy expense possible. And when we look at existing clearinghouses, we look at the way that things operate today from a financial standpoint, it's extremely inefficient compared to what it will be. So as a person who likes to, look at nature and take inspiration from nature, I'm saying it's only a matter of time that this kind of sorts itself out to operate in the most efficient and effective way possible to the most number of market participants as possible. So I see it as a little bit inevitable. It's just the timeline.
Yeah, and how do you think the idea of a Bitcoin stockpile, or maybe even, tokenized US dollar, USDT, maybe a more kind of legitimized path for that, how can that help with, there's this idea called the Triffin dilemma that kind of suggests that it's really difficult to be both a global reserve currency and have a positive trade balances. And this seems to be something that Trump is going after really hard. He doesn't like to have trade deficits with anyone, but that seems like it kind of, difficult to maintain the role of the US as a reserve currency. Is there a way, do you think, where this technology can help let some steam out of the system?
Yes. So, Perianne is an author. Brian Estes, David Bailey, they've authored this white paper on Bitcoin bonds. I think that as we're bridging from this past legacy dollar dominance system to this new Bitcoin as basically the base layer of money system, you need a way to gradually transition over to this new system without creating just massive disruption in financial markets. I
Yeah.
personally think that one of the most brilliant ways and thoughtful ways to do this is if the US would start backing their debt issuance with, and it doesn't even need to be a small amount of Bitcoin behind their bonds that they're issuing. When we look at the bond market, they can't issue anything with long duration, or I think you'd have failed auctions. And that's, you saw this demonstrated by Janet Yellen for the last year before she left office, where the only type of debt she was issuing was 1-year notes, right? And I believe the reason that that was the case is because anything, if she was issuing a 30-year bond, I think we would find out real fast how poorly that would come to the market. And so by inserting Bitcoin into fixed income, look at MicroStrategy. Look at they're issuing debt with zero coupons on it. Now it is convertible, but that's the tether to Bitcoin, right? That's how Bitcoin is part of that fixed income product. And I think that if municipalities and if the federal government started taking this seriously and maybe backing the face value of these bonds by, call it 1 or 2% with Bitcoin, that could be multi-sig, so that the buyer doesn't have to worry about being rug pulled. It'd be time locked multi-sig things, stuff you can't do with gold. You better hope that they give you the gold if you were backing it with 1% gold. Bitcoin makes that very different. The technology completely enables that the person who's the buyer isn't rug pulled, which is vital moving forward. I think that we can actually bridge this transition way better than what some might expect. So I think it's a brilliant proposal. Kudos to Perianne yet again for being a part of that. And I'm trying to get the message out there because I think it's a brilliant idea.
So
Yeah,
go ahead.
thanks for the endorsement on the bit bonds idea. And we have had a lot of success in getting that in front of very senior people within the government. So it is under consideration. It is being reviewed at the highest level. But one of the things we were looking to solve for is how do we make US bonds more attractive? We have extremely high, historically high interest rates right now. How do we increase demand for US bonds? So to me, it's kind of very simple. How do you make something more appealing for investors? Back it with the best performing asset class in the market, which is of course Bitcoin. So it's another reason why I think Bitcoin is a strategic asset. We should have strategic reserves. And then the bit bonds is, another kind of piece of that to take it to the next level. But it is a very elegant solution. And honestly, like, what does the government have to lose? Our ask is really, issue some amount that's relatively de minimis in the federal government's budget and try it out. And if it doesn't work, it doesn't work. But if it does work, it has tremendous upside for the government and for the country.
Jesse, the government has a massive issue on interest expense. Like,
sure,
interest expense is higher than the DoD budget. And for anybody that's ever observed some of the things that they do in DoD, this is absurd amounts of buying power that's just being flushed through the cost of funding yourself, right? The interest expense. And so what bit bonds do is I think they have an enormous potential to lower interest rates at a time where they just kind of seem to be keep going higher, and they keep going higher on 1 year money, on a note. We're not even talking 30-year because they haven't issued it. And I think if they did, they would get a real dose of reality as to like the appetite for that. So like this is vital, because when we look at the interest expense blowing out, they better come up with something creative. And to Perianne's point, if they go out there and they do this in a small de minimis amount to just test it,
Yeah.
I think what they're going to find is the oversubscription and the demand for this is going to blow their socks off, and they're not going to believe the interest rate that they actually get on the issuance of it. So like, why not try this out? And if you're a local municipality, you're nuts if you're not entertaining this idea, in my humble opinion, because guess what? You can't print the currency. So you better figure something out even faster than the federal government that can print the currency.
And the implications globally, I think, would be massive as well. You see the issues that El Salvador has had with the IMF. If the US is issuing bit bonds, I think, that goes away pretty quick, I would think.
Yeah.
Another part of and I think another way that Bitcoin can fit into this, I'd be interested to get your thoughts on it, is I was listening to Luke Gromen, who I know you interviewed recently. He was on Tucker Carlson, and he was talking about an idea similar to this, but from a gold perspective, saying that the US could, allocate more resources into gold, and then kind of, because it's the debt that's the problem. And then eventually you have a revaluation, gold price goes up, you can use this to pay down the debt. And then that could be another way to transition out of it. So is there I think Trump has said this publicly as well, that could be a reason for the digital asset stockpile, is you can leverage Bitcoin price appreciation to pay down debt.
Yeah, I mean, you can do it with gold, but going to the point that I was making earlier, as far as like, how does let's say you're Russia, and like, first of all, do you think they ever want to buy more sovereign US debt ever again after what happened? The answer is no. Okay. But if you had a multi-sig, let's say you were fully backing the issuance with Bitcoin at the time of purchase, just to kind of make this more of an example, right? If you're Russia and you're going to get for sure the face value in Bitcoin because you're holding a time-locked multi-sig Bitcoin address that at the time of maturation, call it 10 years, that it defaults to a single key that's yours, right? Because the 10 years is up. You own the face value of that issuance, and there's nothing that anybody can do. Now let's do this with gold, right? Who's holding the gold in escrow until the maturation of the bond? Well, the issuer probably is, right? Especially, right? How do you know for sure you're actually going to get delivery of that? You don't. I hope they give it to me. I hope they honor the contract. Right now, I could go on and on of like the concerns that I have with gold. Here's one more. When you look at the derivatives market on gold, almost like it's cash settled, right? If there's one thing we learned about cash settled markets that aren't settled in spot immediately, that with like no frictional barrier whatsoever, I don't have to load up a C17 with gold bars and fly it to wherever, right? There is a massive, massive technological difference between these two markets. And so like, hey, there's gold bugs out there. They're going to keep talking about this stuff all day long. For anybody that actually has done the hard work to understand how this technology works with Bitcoin, I think they're looking at it with a little bit of a smirk on their face saying, well, good luck trusting, like the reason gold, I'm sorry to go off on a rant here, but this gold has failed with 100% certainty from a sovereign level throughout human history, every single time. There's a reason everybody has always come off of a gold standard, right? And the reason why is because it requires trust. It requires trust to ride a paper currency on top of it that has always, every single time, 100% of the time throughout human history, has failed because the government has, at some point, sometimes it lasts for 100 years, sometimes it lasts for 30 or 40 years. In the US's case, they went on the Bretton Woods, right, in the 1940s and had to come off by the 1970s because they kept changing the money multiplier and how many paper units rode on top of that gold reserve. It failed from a sovereign level. Personal level, yeah, sure, you can squat on a gold bar and protect your buying power or whatever. But from a sovereign level, it has failed every single time. And so good luck convincing somebody that you're going to back your debt with gold when it has failed every single time in human history.
So you think we're going to have a better chance backing it with Bitcoin than gold?
Yes.
It's interesting. I'm a reformed gold bug, so I came to DC as a gold bug, and
Sure.
was advocating to go back to a hard money standard, but that was before Bitcoin was invented. So I think there's a reason why there's so many people that call Bitcoin digital gold. I think gold has served its purpose in history, but having that limited supply, the hard money standard, I mean, our country was founded on that principle, but we're in the 21st century. We need 21st century technology to power our monetary and our financial system. And that's where Bitcoin comes in. So I don't know if most people fully recognize like the historical importance of the moment that we're living in, where we're transforming away from this fiat experiment to going back to a hard money standard, but being digital money. There will be a lot of history books written about this time, and kind of going back to the bit bond idea. So transitioning off of a fiat standard back into a hard money standard, that does need to be done in a very controlled and safe way, because if you have massive shifts happening in the market overnight, a lot of people are going to get hurt. So what we want is a very controlled and calm transition that's going to take many, many years. And over time, it will create a more sound financial system and monetary system. So I do think Bitcoin is the future, but this is a longer term conversation and transition that's underway.
Yeah, I think that's a great place to wrap it up. I couldn't agree more. I think 2025, I think it feels like an optimistic year, right? I think everything is up for grabs. A lot of things are changing, but it seems like generally moving in a pretty good direction.
Yeah. If you don't mind, I'd love just to also mention a film that both Preston and I were featured in, the God Bless Bitcoin film, that talks on this exact trend, and it creates the moral case for Bitcoin. And we studied all the world's religions and what they say about money, and then we juxtapose Bitcoin to what do scriptures say about what money is, and we make that moral case. So I think as so many people are out there talking about Bitcoin, there's a lot of misconceptions that just the general population has. And we look to address that. And we talk about what does the future look like on a Bitcoin standard. We think it's a beautiful thing. So if you haven't seen it, you can watch it for free. We gave the movie away for free to the world, so everybody can learn about this technology. It's just godblessbitcoin.com if you want to watch it.
Sounds good. Well, thanks a lot. I appreciate the time today. It was a really good conversation, and looking forward to meeting again in the future.
Thanks, Jesse.
Thanks,
Great.
Jesse. See you, Perianne.
Thank you, guys.
Good to see you.
Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today